then you would be able to uh, do that. You won't get your grade right away because the essay would take some time to mark. Not essay, the paragraph would take some time to mark. But then that is what we're going to do. It's not too long, but it's an hour and 30 minutes. And the next thing is that if you start some reason your electricity came went out or you weren't able to finish it, I can get you an extension. Or if you're not well, and so everybody has up to Sunday night, Sunday midnight, to finish the quiz. Um, and once you, so you have doing tonight 9 p.m. and Sunday midnight to finish the quiz. All right, an hour and 30 minutes. Once you start, you can't stop. And so I would advise you to ensure that your information, yeah, that you kind of go over chapter one, and any questions you have, we can go over them today. And as we get ready to go on chapter two. All right. If all hearts and minds are settled, let's continue. Does anyone have any questions based on last week's class? Anything that they saw or read in what we would have sent to them? Can you let me know? If you have any questions, comments, queries, concerns. All right. Shakara, is that a question you have, or that's just your hand still raised from earlier? All right, so let's look into chapter two. I trust that everyone has their book already, so we'll just go into chapter two, and we will see what chapter two has to say. 1 second for me. I trust that everyone has their book already as well. We won't be on very long tonight. We'll be coming off about 7:45, so that you can have a little bit more time to study for chapter one or read over your notes from chapter one so that you can get ready for the quiz that you're going to have next week and the week after. I would implore you to please secure a calculator. It'll be good if you get a scientific calculator, at least, or at least one that allows you to do powers on the calculator, because we're going to be talking about the time value of money. And so we would want you to have your calculators in place. And after we went over chapters 1, 2, and 3, 3 being time value of money, then we'll have another test on chapters 2 and 3. So not after every section, but after every other section, we'll have some quizzes so that we can stay abreast of what we are studying, so we can ensure that everybody has an understanding of what we are studying, so that we can be on even keel. I'm just pulling up right now some notes on chapter 2. When we talk about chapter 2, we're actually talking about, and we're still in the book, we're talking about financial statements. All right, we're talking about financial statements, understanding financial statements, because financial statements essentially give a good picture of exactly what a company is about. So financial statements can give a picture of how management and how persons who make decisions in the company are doing concerning the capital that they receive, and how well they actually maximize the capital to bring about profits for the shareholders. Okay, and so when we talk about financial statements, there are 4 things that we're going to cover tonight. We're going to explain the foundations of the balance sheet and the income statement. We're going to use the cash flow identity to explain cash flow. At the end of this, you will expect you to provide some context for financial reporting. And then fourthly, to recognize and view internet sites that provide financial information. All right. So when we talk about financial statements, anybody want to take a stab at what a balance sheet is? Anybody want to take a stab at what a balance sheet would say? What does a balance sheet show as it relates to a company? Right now, but balance. What's made to balance in a balance
The,
sheet
prof-
for?
the balance sheet can discuss the profit and loss in a company along with the expenses and the liabilities.
Go. I'll go.
I think somebody may not be on mute. All right, let me see. Okay, perfect. That is true. What the balance sheet actually does is it shows the assets, the liabilities, and the capital of a company. And what we will learn is that assets, the basic formula for accounting is assets equals liabilities plus capital. All right. And so what that actually means is that for the assets, which are the things that are owned by the company, they are derived from two main factors: liabilities, meaning you had to borrow for them, or capital, you had to put up your own money to get them. So for all of your assets in the company, they are therefore more or less garnered, or they are received by liabilities and capital. And it's just a basic understanding of this, in that your assets should equal your liabilities plus your capital. What you borrow and what you brought into the company will equal what the company owns. All right. So when we talk about this section, we're talking about the interrelationships between the four financial statements. You must remember there are four financial statements. There are the income statement, the balance sheet, the statement of retained earnings, and the statement of cash flow. All right. These four statements show the full picture of what's going on in the company given a snapshot. All right. At a certain period in time, as at a certain date, these four statements will show what's going on with the company. All right. Your income statement, your balance sheet, the statements of retained earnings, and the statement of cash flow. All right. And we're also going to be covering the process by which these statements can be used to project a firm's future cash flows, which in turn are essential for accepting or rejecting projects. Remember, in this course, you're learning to think like a financial manager. You're learning to think like one who makes decisions about finances. All right. And so what happens here is that you must come here with the understanding that if you understand these four things, you can project how much money that company will be receiving at the end of the day. All right. So, and then based on what the company will be receiving in the future, you can determine what projects you need to accept or reject, because you would want to make a decision on the project you want to accept based on how much money you're flowing, because it doesn't make any sense going into an expensive project that you can't afford 3 years down the road. All right. So these four things, again, your income statement, your balance sheet, your statement of retained earnings, and statement of cash flow are used to paint this picture for you. So the next thing, when you talk about a balance sheet shows a firm's current and fixed assets. What's the difference between current and fixed assets? What's your understanding of the difference between current and fixed assets?
Current assets are assets that are in the now, like recurring or constant, and the fixed assets are for a specific amount of, for a set amount of time, or like larger in size and value.
That is correct. Anybody want to add to that or take away from that? Anybody? So as was said, fixed assets are more long-term and they're tangible pieces of property or equipment that a firm owns and uses in operations to generate income. All right. So for instance, when you think about a tractor on a farm, a tractor is a fixed asset because it has a long life. Also, the firm owns it, but not only does the firm own it, but it actually helps to do work to bring in profits for that company. All right. When you're talking about current assets, you would think more along the lines of assets that are expected to be sold or used as a result of standard business operations over the next year. All right. So these kind of assets are expected to be used and gone within a year. So you think about things like cash equivalents. You're thinking about accounts receivable, because you would want, and the reason why you would call accounts receivable current assets is because you're expecting to be paid within a year or less. All right. And so when you talk about current assets, you're thinking about stock inventory. You want to be able to turn over your stock within a year. And so these kind of assets would actually be considered current, whereas your fixed assets would be more long-term think in terms of buildings, think in terms of tractors, think in terms of automobiles, think in terms of land itself. All right. So anything that is long term, that has a long life, more or less, and that is used to generate income for the company, you can consider these fixed assets. All right. So let's just move on just a bit from there. All right. So the balance sheet shows the firm's current and fixed assets, and it also shows the liabilities and the owner's equity accounts that were used to finance those assets. When you look at a balance sheet, they normally start off with, you would see them segmented. So all of your current assets would be in a certain spot. All of your current liabilities would be in a certain spot, as well as you would find that depreciation on your fixed assets would be subtracted from your assets. Why is that? Why would you subtract or remove depreciation from your fixed assets? Anybody want to take a stab at that?
I would think because your fixed assets would wear down over a period of time, so you would have to decrease the value.
So you're decreasing the value would then do what? Show the real value.
Right.
That's the real cost of it. So in case you had to sell it today, this is what you're going to get for it. Because what will be an issue if you did not depreciate or show depreciation? What would be the issue for the company?
It'll make the balance sheet, it'll give it a false picture. It'll paint a false picture.
That is correct. And how would this false picture affect a potential investor?
Because he think he'd probably be getting more for his money.
That is correct. So it would.
I have a question though, Mr. Cartwright.
Sure.
You have land as a fixed asset, right? Would land don't depreciate?
Land. What you normally put depreciation on a fixed asset such as a truck or equipment or something like that, not land.
Okay.
Necessarily. Yeah.
But it is a fixed asset.
It is a fixed asset, right?
Okay.
Your land, your building is a fixed asset, and you will take away depreciation because for a truck or an equipment that you will use, you may want to sell it. And if you want to sell it, the actual value of that to the firm is actually whatever the cost is minus depreciation.
Depreciate.
All right, let's push on. The next part about the balance sheet has 5 sections. All right, so if you're taking notes, does everyone have their book? Let me ask that question first. Do we still have persons who don't have their textbook yet? Because you may not need to write as much notes if you have the textbook.
I don't know that it's as yet,
All right.
but I will get it this week.
Not a problem. And if you have your textbook, you just may want to highlight these sections as well. So if you hear me repeating something, just a note. If you hear me repeating something, chances are it's going to be on a quiz or a test. Just a little, heads up. All right. So your balance sheet has 5 sections. Your balance sheet has 5 sections. You have your cash account. You have your working capital account. Your working capital is current assets minus current liabilities. All right. Your current assets minus your current liabilities, which is your net working capital. From your understanding of what an asset is and what a liability is, why would your current assets minus your current liabilities, why would that be considered working capital?
The working cap, that because that would be what you left with after you minus your current assets from your liabilities.
Correct. And current assets, from your understanding, is what?
Current assets are items that are expected to be sold in less than a year.
Right. And your current liabilities are?
I think, I don't know.
Things that you owe, that has
Right.
remained in less than a year. So you would want to know, your working capital is essentially what money you have to work with now. If I were to sell all these things that I have to sell in a year, minus what I have to pay within a year, then that shows what I'm working with. Because you can't necessarily count money that you owe. It's almost like when you get paid $1,000 at the end of the month, but your bill that is due is $600. You don't really have $1,000 in your hand. You really have $400. All right. So you think about it in terms like that. Another section of your balance sheet is the long-term capital assets accounts. All right. This shows the gross and the net book values of long-term assets that the firm has invested into since its inception. The accumulated depreciation figure shows how much of the original value of the asset has already been expensed as depreciation. The depreciation is an actual expense. The removal of value over years is actually a cost to the company, because you have to think about when these things depreciate. You have to think about um, cost of maintenance and cost of replacement, all that kind of stuff. So when you talk about long-term capital assets accounts, it shows the gross and the net book values of the long-term assets that the firm has invested into since its inception. There's also a long-term liability account, which includes all the loans that the firm has taken on for periods greater than 1 year. All right. Your long-term liabilities or debt accounts include all outstanding loans that the firm has taken on for periods greater than 1 year. And so as part of the loan is repaid, every year the balance hopefully will decline. So when you know your long-term liabilities accounts, what's the benefit of knowing this figure, your long-term liabilities accounts?
You will be
What's the
able to
question?
understand
So,
the benefits of knowing your long-term liability.
right, your long-term liabilities accounts. What's the benefit of knowing this amount?
You're better able to plan for future investments or payments based on what your projected income would be.
Correct. And so when you know this, then you will also know, listen, I have this amount of time left to pay off this loan. So this is what I need to, this is how I can plan for the future. Okay.
Right.
The last thing is your ownership account. It includes the capital contributed by the owners or common stock account and the retained earnings of the firm since inception. What are retained earnings? Anybody want to take a stab at that? What are retained earnings?
Is it earnings that that you put aside or you, I don't know, save separately?
Right. And
In case the company or the firm runs into any hardship?
right. And and the purpose of this also is to reinvest. So what happens is whenever you make a profit, especially for younger firms and even for older firms, I guess, whenever you make a profit this year, you don't want to spend everything. You don't want to give everything out in dividend or pay it back to shareholders. And that's why when you're making investments, especially in brand new firms, a number of them don't stocks or dividends at the first 5 or 10 years or whatever the agreement is. They do this because they want to retain your earnings, meaning they're going to hold back on paying out dividends for the purpose of reinvesting that to either increase technology or to improve the facilities or whatever it takes to add value to that company. That's why they are retaining the earnings. All right. So when you talk about that, the year-end retained earnings figure is determined by adding the net income for the year to the beginning retained earnings and subtracting any dividends that are paid during the year. So I want to repeat that again.
Mr. Cartwright, are we supposed to be watching a slide presentation, or are you just teaching?
No, I'm just teaching. You can take notes. Sorry. Yeah, there are no slides for this one.
Mr. Cartwright, what page are you on the book?
I'm on page, well,
60.
actually, is that, pardon?
Page 60.
Right, I'm on page 16. And my
16 or 60?
what
60.
60. I'm looking at the lecturer's notes on my end, but this should be under the
But in the
with JNF Sons. Do you see that?
I see the part where it says the balance sheet, and then I see where it says long-term capital asset account, long-term debt liability account. Before
Okay.
the income statement.
right. And right. He read on that section.
Okay.
It says ownership account.
Okay, just wanted to make sure.
Right. Sorry about that.
No problem.
So your ownership account includes the capital contributed by the owners and the retained earnings of the firm since inception. So how do you determine retained earnings? You add your net income for the year to the beginning retained earnings figure, and then you subtract dividends that were paid during the year. So
Say it
what you
again,
do-
please.
So you
Can you
have
say that?
the retained earnings from the year before that were brought over into this year, right? That's retained earnings brought forward. You would add your net income for this year, and if you are paying any dividends, you subtract the dividends. And that shows what your retained earnings are for this year. So that's almost like you had savings last year, you add any income you got in this year, you subtract any paid out, and then this is what you have in your hand. That's how I kind of think about it. All right. So remember now, the retained earnings figure is an accumulated total of the undistributed earnings of a company since inception. And it is not cash available for future expenses or investment, since it's already being used in the business. All right. So the return, you want to take this note, the retained earnings figure is an accumulated total of undistributed earnings of a company since inception. And it is not cash available for future expenses or investment, since it's already being used in the business. So this is just a running tally of any figures of any funds, that were undistributed by the company. Anybody want to take a stab at what the income statement is?
The income statement would be a statement showing all of the income for the company for at a certain period of time.
Go ahead, sorry.
So what's the end?
Adding at that part, the income statement is?
The income statement shows the company's earnings or their income at a certain period of time.
Right. It shows the expenses and income generated by a firm over the past period, typically over a quarter of a year. So it's a snapshot, like you said, of what the expenses and the income are for as at a certain date. All right. It can be thought of as a video recording of expenses and revenues. So with your income statement, your revenues are listed first, followed by cost of goods sold, depreciation, and other operating expenses to calculate earnings before interest, and taxes, or operating income. So let's look at it again. Your revenues are listed first in your income statement and is followed by your cost of goods sold, followed by depreciation and any other operating expenses. And this figure is now called the earnings before interest and taxes.
Earnings before.
Earnings before interest and taxes. Another name for earnings before interest and taxes is operating income.
Come. See, so in the case it isn't, as if she gets help.
Okay.
Mr. Cartwright, what would other expenses be?
No, that's taking on another child.
Expenses would be
As I tell him,
any other expenses that associate with or anything that happened during the year that would be part of your operating expenses for that year. So anything
Like
that
a miscellaneous?
miscellaneous expense, say you needed to get a light bulb changed, or you needed to call in a plumber to do some plumbing work. These expenses that are attributed to you actually operating your franchise or operating your business during the year. Because if the balance sheet, you don't put that down as well. So all it is associated with the operating expenses. Okay. We're gonna ask if a person isn't say speaking, if you just mute the call for me. If you're not, ask your question. Sorry, go ahead.
Connect them out. Give me a. She could do it all in 4 years. Yeah.
Oops, sorry.
Okay. So then after that, from your EBIT or your earnings before interest taxes, you deduct interest expenses to get taxable income or earnings before taxes. And finally, after applying the appropriate tax rate, we deduct taxes and arrive at net income or earnings after taxes. All right. So let me just let me see if I could, what I'll do to make it make sense. You could read your book also, but what I'll do is I'll share my screen so you can see exactly what it looks like. Does that work for you?
Yes.
Mm-hmm.
Okay, perfect. All right, give me 1 second. I think that makes sense if you can actually see what we are reading. Cargo. Is anybody here in Mr. Cargo's class?
Yes.
Y'all got a quiz already?
Yes.
Yes, we have a quiz due. That's due on
Monday.
Monday. Yeah.
What happened? Why you sound so depressed? What happened? Just so you know, he me in the Moodle way. So if you see the first test, kind of cause you scratch your head, then yeah.
Man, please
But
don't
he give us two attempts.
Oh,
Yeah, you get
Give us
two
two attempts.
It'll
There's
be
another
long.
Mr. Cargo,
You get two
Cartwright?
attempts.
Yes.
Oh my
Pardon?
gosh.
You use another cargo?
Oh,
No, I
in the making, in the making.
Oh,
Mr.
I can
Cartwright,
die.
he give us two attempts though.
yeah, you get two attempts. But see the difference.
And we have plenty essay questions that he just sent. We have to ask. Answer.
Yes, 41 or 40 something.
The
It's
difference
what-
though
Mm.
The difference with that is that at least I giving you an hour and a half. You know, Kaga say man, he's give he's give quizzes for an hour. I said no man, I can't do that yet. Probably by the second or third quiz, we can see how that work. But you know, for the first one, I could be a little lenient and give an hour and a half. You know, like a
Mr. Cartwright,
yes, ma'am.
you by the second or third quiz, that means we have been more than 3 quizzes?
Oh yeah, man. Yeah.
What's the,
Again,
what is the estimated amount of quizzes that we can expect to have, and do you drop the lowest grades? How exactly does that work?
how many chapters we have? We have about 10 chapters. Do we get about 10 quizzes? No. No.
Ladies, we're gonna work on him coming forward.
By the end of the by I promise you by next week we'll have a full layout on how we're gonna drop a quiz or not. But for the last class we did drop a quiz. And then we did a makeup essay as well. So we'll see how it goes. But I promise you, no one fails the class.
Y'all like, say that boy. See how it goes.
Miguel, can I share the screen, please?
See how it goes.
Let me see. Did everyone your text that you use, which site did you use to download the text? Anyone? Which site did you use to download the text?
The same one you sent him WhatsApp.
Yeah, that's the one that you sent.
Okay. Did Miguel allow me to share my screen yet? Nope. All right, let me do a quick call to Miguel. And I'm saying that not everyone got the link for today's class on time or something like that. I'm gonna recheck the email addresses to make sure that everybody can actually. 1 second, Miguel, can you allow me to share the screen, please? Okay, no problem. Sorry, go ahead. Someone had a question?
This is Angelique. My email address is wrong with Miguel is typing too.
Okay, but you got it when I send it, right?
Yes.
Okay, perfect.
Okay.
Yeah, I'm gonna recheck the master list that the school has, and I'm gonna send a screenshot to the WhatsApp group to make sure that everybody got the quiz. Also, I can tell whoever goes on Moodle or not. So, yeah, that's gonna determine too how many quizzes we have.
Okay.
Because I might drop a quiz right there, you know, in case people don't go on Moodle, or if they went. It actually tells me how many days and hours and seconds you will last on Moodle. So, you know, if I see nobody going on Moodle, we could always drop a quiz there, and then, you know, you may miss the quiz. Let me see. Can I? Yes, I can. All right, perfect. So let's share the screen. Can everyone see it now?
Yeah.
Perfect. All right. So here it goes. It says here that so when you look at your revenues right here, this is how your income statement always starts. It starts with your revenues. You subtract your cost of goods sold. Okay. So you look at what you would have made for the year, and then you take away what did it cost you to actually make what you made. So your goods sold. So you have your goods which are sold. Of course, it's just basic understanding. So you have a cost of goods sold. Then you have your wages, of course, because you have to pay people who were selling to get your revenues. Your utilities, of course, are what goes into factoring what you would pay to ensure that your store is open or your brick and mortar is open. So you deduct your electricity, your water, everything that enables you to open your store to sell these stuff. And then other expenses, like I said, if something broke, if a shelf broke and you need to get the shelf repaired, you would put that expense in there. If you had to redo the bathroom because there was a leak or something like that, you would put that in your other expenses. So anything that's associated with you actually doing day-to-day business, or if it's a service and it attributes to what you're doing to provide the service to get the revenue, you put it in your other expenses. And then you got a figure called earnings before depreciation, interest, and taxes. Depreciation, interest, and taxes are not directly related to what you would have utilized to make your revenues, but they are expenses nonetheless. So from your earnings before depreciation, you minus depreciation, so you have earnings before interest and taxes, and then you subtract your interest, and then you subtract your taxes. All right. So what you would understand is so your basic income statement is this: you have your revenues, you take away everything associated with the cost to get those revenues, then you subtract your depreciation, then you subtract your interest, then you subtract your taxes, and that's how you determine your net income or your net loss. All right. We good?
Yes.
Good. Perfect.
Yes.
All right. So when you look at this, JF and Sons had earned an operating income of negative $2,000, or they were in the red $2,000 during their first year. And after accounting for interest, they would show a loss of $52,000. All right. Thus, no taxes would be paid because the company made a loss. So this is, of course, a U.S. book. So no taxes are paid because there was no um, income, or there was no profit. All right. So now the net loss of $52,000 is not the same as their change in cash balance, and that's from an earlier statement, because of three reasons: accrual accounting, non-cash expense items, and interest being treated as a financing rather than an operating expense item. All right. So you have different kinds of expenses as well. Your financing expense is what you are paying on what you would have borrowed. It doesn't necessarily tie into what you would have spent to actually run the business over the year. Everybody's good with that? Everybody's cool with that? So it's treated differently when you're looking at your balance sheet. You have those expenses that are directly attributed to what you would have made during the year. And then you would have those things that are paid on loans that are not directly related to what you would have made that year. Because whether you made money or not, you have to pay interest on a loan that you made, that you took on. All right. So it doesn't necessarily tie in. When you look at your non-cash expenses, you're talking about expenses shown on the income statement, like your depreciation of $125,000. They're actually annual charges. So what happens then is that when you talk about a truck, this amount is automatically taken off. Like they say, when you drive a car off the lot, it's automatically depreciated by such amount. And every year they take off probably 10% or 20%. And so that means by year 5, that car is definitely not worth what you paid for it when you first drove off the lot. So all of these things have to go into your accounting as it relates to financial statements. Once again, this is very important to know, because this is what you need to know to be able to sell your business to a potential investor. Or when you go to a bank and they're looking over your records, they're seeing what your company is actually worth. That if they give you this loan, while it may be looking good on your paper that you're making $300,000 in revenues for that year, your net income was actually in the red for $52,000. That's why it's important for you, even as an investor, to know how to read financial statements, because you'll know, don't mind what they make for that year. Look at all the expenses and all of the depreciation and all that kind of stuff that the company has to kind of mark down, so you know the true value of what that company is worth. All right, so let's look down. Operating cash flow is another operating cash flow is another formula that you have to work out when you're looking at a company's worth. All right. So your operating cash flow is your net income plus your depreciation plus your interest. Notice um, your net income plus your depreciation plus your interest defines your operating cash flow. The firm is showing a negative net income, or which is a loss of $2,000. It's cash flow. So even though it's showing a negative income, its cash flow from operations of $123,000 is positive and considerably higher. So your cash flow, or the money that you took in that year from the business, which is that earnings before depreciation, interest, and taxes, actually shows $123,000. So if you took away all your expenses that are attributed to what you would have made that year, you're actually having in your hand $123,000. But then, of course, you have to reduce this amount by these, I call them phantom figures of depreciation, interest, and taxes. These aren't expenses you can touch. These aren't even expenses that you necessarily took out of your pocket and you saw it coming out of your hand. These are actually expenses that are attributed to you actually having machinery and actually making a profit and having to pay the government such and such amount over the year. When you look at your statement of retained earnings, this is considered to be, as it says, the fourth financial statement that firms prepare and report. It shows how the net income for the past period was allocated between dividends and retained earnings. Why would you choose not to pay dividends but retain earnings? Anybody want to take a stab at that? What would cause you as a finance manager determine not to pay dividends but to have retained earnings?
To try and make more money that year.
And how would you be making more money that year if you increase your retained earnings?
I don't know. Invest in
You have
more.
more money to invest.
Yes. So what happens is you hold back those earnings for the purpose of actually doing some more work on the company, in the company during that year. All right. So this is held or returned and saved for future use. It could
So
be
what if
used,
you were to buy the dividends?
if you were to pay the dividends, this comes as an expense to your company. So it reduces your net profit for that year. Return earnings can be used for funding an expansion or paying dividends to shareholders at a later date. So you can tell your shareholders, listen, okay, we're just going to hold this money on the side for this year. Just hold on tight till 3 years, and I promise you, what the company will be in 3 years will pay you 3 or 4 times the amount that you would have been paid this year. So as an investor, you need to know also what kind of arrangement your company has, which is another reason why persons may vouch for buying or getting bonds as opposed to stocks, because just because you purchase stocks doesn't necessarily mean that you'll be getting dividends every year. Sometimes you may have growth stocks. Anybody want to take a stab what a growth stock is? GROWTH.
Stock that increase in value over time.
Right. And so what happens is they don't pay out. They don't pay out necessarily every year. But what happens is the value of your stock is greater at the end of the year, at the end of the day. And so 5 years down the road, if you want to sell your stock, it'll be a whole lot more worth in your hand than if you would have been getting dividends every year. All right? Because the more money they pay out in dividends, the less money they have to actually expand, the less money they have to actually improve infrastructure, the less money they have to improve technology. And so while they may be making a profit, they may not be maximizing what they've made because every year they're paying out dividends. All right, so you want to watch all of those. Pay clean attention also to these cash flows, these are particular formulas. You may want to screenshot this page, or you may want to take a snapshot of this because you would have an expectancy to know these.
All of them?
Basically. There's some more. Hold on. So let's scroll down to the statement of cash flows. Next week, for next week and the week after, which is week 3 and week 4, we have Rochelle, who is coming in to teach on these formulas or to teach. Let me see if I can get Rochelle. Can you give me the exact title of the next 2 weeks?
It's the time value of money that I'll be covering on week 3 and 4.
Right. So next on week 3 and 4, we have time value of money. So it helps you with making investment decisions. It helps you as a finance manager to know where to invest, what to invest, and how much your money will actually be worth at a particular point in the future. And so you'll know what kind of decision to make regarding investments and or even savings. And it doesn't make sense to save, doesn't make sense to invest. And so you're calculating these actual formula will help you to make informed decisions. All right. So when you take your final exam or anything like that, this is the kind of questions that you would be asked. So you would have to work out the formula, and then based on what your answers on the formula, you'll have to say what decision you're making, why you're making that decision, and if there are any alternatives that you can make. All right, or any alternative decisions that you can make. All right, let's look at the statement of cash flows. The statement of cash flows, or the sources and uses of cash statement, as it is often called, is compiled by taking information from the income statement and the balance sheet and organizing it into 3 sections. What are these 3 sections? What's my cash flow from operating activities? What's my cash flow from investing activities? What's my cash flow from my financing activities? So as to reflect the change in ending cash balance of the firm during that reporting period. So let's look at this. Let's look at this formula and break it down and see if we get an understanding of it. Cash flow from assets equals cash flow to creditors and cash flow to owners. All right. So with your cash flow from assets, what are the 2 things that make up your cash flow from assets?
Cash flow from operating activities
and investment activities.
Pardon? You have the cash flow from operating activities and cash flow from investment activities. How are these 2 cash flows from assets? Anybody? Lord, you had a rough day. You had a long day. Cash flow from assets, cash flow from operating activities, cash flow from investing activities. Let's see if we can break it down. The cash flow from your assets would equal, of course, to your cash flow to creditors and cash flow to owners. So what this actually means then is that, as I said earlier, when you talk about a balance sheet or the balancing act in any company, any whatever, you have your assets always equal your liabilities and your capital. All right. So whenever an owner, whether they are a shareholder or not, whenever they make an investment into the company, there is an expectation that they have money coming back to them. Agreed or disagree?
Agree.
And anytime somebody lends money, there's an expectation that cash will be returned back to them. Your cash flow that you're giving back to your lenders and your cash flow that you're giving back to your shareholders can only come from the cash flow that's coming from the assets. Your lenders and your shareholders would have given you money to purchase assets to make a profit. When your assets make a profit from operating and investment activities, it's paid back to your creditors and your owners by cash flow from financing activities. We have an understanding of that? It makes sense? Or do we break it down a little bit more? Anybody that's still a bit hazy to them? We good?
Yes.
Okay, perfect. All right. So let's look at this. Based on, as it says here, we have to remind you that based on the accounting identity and double entry accounting principles are explained earlier, an increase in asset, except cash, will result in a use of cash, while a decrease of an asset will result in a source of cash. How would a decrease of an asset result in a source of cash?
May you please repeat the question? How can a decrease in assets result in what?
How would a decrease in assets result in a source of cash?
I guess, for example,
Sale.
selling inventory.
Right.
Correct. Selling inventory. What's give me another one. Give me another asset once decreased would be a source of cash.
The revenue?
Selling shares?
Not particularly. When we talk about, say for instance, when we use accounts receivable, how would a decrease in accounts receivable be a source of cash?
I guess your borrowers are paying back the funds that they owe you, so that would be a source of cash.
Right. Why you sound scared? Like you're sure.
I was thinking.
I got you. All right. Not a problem. All right. So let's look at it. Let's look at another thing. All right. When you talk about an increase in an asset except for cash will result in the use of cash. That means what? How do you make that make sense? How would an increase in an asset, except for cash, result in the use of cash?
Would that be like if you have to buy something that the company needs?
Right. So you buy something the company needs, which means that you have
That's an
to
asset.
withdraw from your cash to purchase
Right.
this. Correct.
Right.
All right. So what that means that, remember now, your cash statement of cash flows speaks to the sources and uses of cash statement. So what that means is that essentially what it means is that the sources of cash, meaning how you get cash in your business, uses of cash is how you spend cash. All right. All of these are essentially shown in your cash flow statement. All right, let's go down. Financial performance reporting. Publicly traded companies provide current and potential shareholders financial performance information, company highlights, and management perspectives by compiling annual reports. In addition, they are required to file quarterly or annual reports with the SEC. Of course, this is in the US, okay? So Regulation Fair Disclosure requires companies to release all material information to all investors at the same time so that no single investor or group of investors has privileged access to the information and is able to profit from it at the expense of others. It's called information asymmetry. Information asymmetry means that all parties have access to the same information at the same time so that everybody has a fair amount of time to make a decision concerning if they will or they will not invest in a company. When you have instances where you have things like insider trading, that happens because someone who has access to this information shares it or makes a decision based on this information that's at a disadvantage to anybody else. All right. So this regulation, fair disclosure, is what protects all of the investors from this. You must also pay attention to notes to financial statements. They provide details and clarifications regarding the various items and methods used to report a firm's financial performance. A lot of information is found in your financial statements. So you want to make sure, your notes to financial statements. So you want to make sure that you are following that to the T. All right. So this is just a review of the double entry bookkeeping. Anybody familiar with debits and credits?
Yes.
So a debit is found on which side of the T account? Everybody familiar with T accounts? Probably not.
Familiar. From accounts.
On the right side,
Got you. So which side? The left side is called the what?
the credits or the assets.
The left side of the T account is the what? The debit or the credit side?
The credits. No.
Sure?
The debit.
The debit's on the left and the credit's on the right.
Right. And so with double entry, you understand that debit, what comes in, and you credit what goes out. So as assets increase, you do what?
Debit.
All right. All right. So a debit and expenditure account, and you credit a revenue item. All right. So expenses, when they increase, they are debited or credited?
Debited.
And when a revenue is increased, you do what?
Credit.
Credit.
Oh, you like credit. Okay. And then you, like you said, you debit an asset and you credit a liability. Oh boy, this carries me back to high school days when I remember these ledgers. I don't know. This brought a scary part to me just now.
We don't have to know that, eh?
Pardon?
We don't have to know that, eh?
You mean this part here?
Yeah.
Let's go over it. Let's see if we can understand this. Oh boy, all the answers at the bottom of it anyway. But let's see, let's make it make sense. All right. So can somebody tell me for this January 2nd, what does this say to you in layman's terms? Tell me what happened here in this particular double entry or this ledger entry in layman's terms. And you can't use recording of inventory, purchase and credit.
You bought some assets. You bought some inventory for the company.
You bought some inventory for the
company.
Finish it.
Oh, you want me to continue to all the dates?
No. I mean, finish that sentence. You bought some inventory for the company. How?
On credit. Oh, you can't say on credit. You didn't buy it.
You bought some inventory.
You borrow it.
You bought it on right.
And paid it later.
Right, because you can also buy inventory by cash.
Yeah. So you credit.
Right.
So you credit your cash.
If you borrowed it, if you bought it by cash, what would this look like?
It would have said, on January 2nd, you purchased the inventory. That would have been your $300 debit, but on the same day, you paid for it.
The credit your cash.
Your cash would be credited.
Your cash would have been in a credit on the same day.
And your cash would also be an asset, correct?
Yeah, it's a current asset.
Right. So inventory asset, cash asset, $300. Anybody want to take a stab at number 2? February 2nd, sorry.
We pay a debt.
We paid a debt. How?
We use cash.
With cash.
So we take money from cash. I mean, we'll credit cash, and then we debit our accounts payable.
Right. So that means then that we paid off some of we owed by cash.
Right.
We paid them $300. All right. So probably what we borrowed, what we bought in
January.
January, we paid back in
Was
February
used, we pay it back, right? Mm-hmm.
$300, and we paid them back by cash. So we borrowed it, but we paid them back out by cash. All right. February 15th.
You sold it on
Some
credit. You sold it for $350.
Yeah, you sold it on credit.
Yeah, you didn't sell. Yeah, sold on
So
credit.
this person owes you money
Right.
for this
We
company.
sold inventory. We sold inventory by credit, so we increased our accounts receivable by $350, and we increased our credit sales by $350. All right, so we gained the data. We increased our credit sales. Now, April 14th, what happened?
The
You
person paid you
received the
back
payment.
Get the bill
They paid us back how?
in
with
cash.
cash.
Sorry,
Okay.
perfect. So let's look at a comprehensive example to show how the three statements are prepared from the ledger entries. So let's say that JF and Sons decide to start a business by contributing $500,000 of their own money and borrowing $500,000 from a bank at the rate of 10% per year. It is the last week in December. All right. Let me see. Is anybody on camera? Wait. No, right? All right. So during the first quarter of the following year, they complete the following transactions. They bought equipment for 200,000. They bought land and building for 400,000. They paid cash for raw materials for 100,000. They bought raw materials on credit for another 100,000, and they bought a truck for cash, $25,000. All right. So this is what they did. They started a business. Their capital that they put in was 500,000, and they borrowed another $500,000 from the bank at 10% per year. Okay. By the end of the year, they made the following transactions as well. So their startup was this. They spent, how much is that? 800 and sorry, six, seven, $825,000 to get started. Let's go down. By the end of the year, they've made the following transaction. They had sales of 300,000, 40% they made off of cash. So that means like $120,000. Is that right? $120,000 they made with cash, and they made the other 180,000 on they put it on credit. All right. The cost of goods sold is $150,000. Wages they paid $20,000. Utilities were $5,000. Other expenses were $2,000. The interest was $50,000. Selling and administrative expenses is another $50,000, and depreciation was $120,000. You don't have to prepare the journal entries, of course. That's cash, owner's equity. What I want you to do for 5 minutes, is it there? No. Well, you wouldn't have to do that. Yes. So in the first journal entry, you see that the company got cash, and they got cash by owner's equity. We understand that, right? From number one.
Yes.
Number two, what does that say? Can someone take a stab at it?
They borrowed
So maybe they
$500,000 from
borrowed
the
from the
bank,
bank.
Correct.
10%.
Right. What about number three?
They
That's what
bought
I bought
equipment,
cash for
200,000.
200,000
Right.
with
Land,
cash.
Right, with cash. Number 4.
Also,
They bought land with cash for
Also bought
100,000.
land and building with cash.
Number 5.
they bought
Inventory,
inventory.
Yeah, with
100,000 with
cash.
cash.
And number 6.
They bought
They
inventory on
bought
credit,
inventory on credit.
100,000.
7. They bought the truck for cash.
Mm-hmm.
Number 8. Explain that one. Cash and revenues.
They got cash in
Uh-huh.
and I guess product out. I don't know. No,
Right.
revenue.
So they sold whatever they sold. They sold $120,000 worth of inventory in cash.
Right.
Number 9, they sold $180,000 on credit.
Mm-hmm.
Number 10, the cost of goods sold was $150,000, and they decreased inventory by $150,000. The wages, they paid $20,000 in cash. Utilities, they paid of course by cash. Other expense, they paid of course by cash. For that, hold on. So, can everybody see this? Yes, what I want you to do. Everybody can see this problem, right?
Yeah.
All right. I want you to do one A, B, C, D. What happened?
Sorry.
You forget you're off of mute.
Right.
I know. One A, B, C, D. I think this is where the Cargill and me. It's come out a little bit. But this won't be due until next week. You just have to submit it, of course, by email. But I'm gonna figure out how we can submit by Moodle, because you should be able to submit by Moodle. If not Moodle, by email. You can have this due to me by next. Since the quiz is due on Monday, you can have this due to me by next Friday. That's good enough.
Yeah,
That's good.
fine.
Okay, because I was almost feeling guilty, but I say, I'll have mercy. All right. So I want you to.
Can you email us?
Pardon?
Oh, you want us to screenshot it?
Actually, what I will do is I will copy it and I'll send it to your email.
Okay.
Okay.
I'll send them to you tonight. Or what I will do is I will figure out a way. I'll put it on Moodle since I think everybody has gotten some correspondence from Moodle, right?
Yes.
Yeah.
Okay. All right. So I'll put it on Moodle, and then you can you can work this out. All right. So I want you to construct a balance sheet for 2016-2017. List all the working capital accounts. Find the net working capital for the years ending 2016-2017, and then calculate the change in net working capital for the year 2017. That's for next Friday. Now, like I said, your quiz for chapter 1 would be starting tonight at 9 p.m. You have between tonight and 9 p.m. and Sunday at 12 midnight to have it completed. When you started, you can't stop. So if your time run out, whatever, and it has a timer. So whenever the time runs out, that's it. There's no extension. There's no nothing. And so it's an open book. We'll see how that works. Open book, of course. So, but you only have an hour and a half. But since it's open book, maybe we could bring it down an hour. I don't know.
No.
What did you say is the structure of the quiz?
No.
The quiz is true and false. The quiz is also multiple choice, and it's also short answer / paragraph. It's not essay, but it's worth 10 points each, but it's not an essay. Once you have the right verbiage, then of course we can make that work. Uh, Let me see if something else I wanna share with you. Um, does anyone have any questions from chapter 1?
No, sir.
I want to see if I could pull up at least one of the. I'm thinking that. Let me stop sharing my screen because I don't want you to. I don't want to tempt you by seeing any of the questions from the exam. So, if I were to ask you this question, how would you respond? Okay. Um, the problem of motivating one party to act in the best interest of another party is known as what?
Can you repeat that again, please?
The problem of motivating one party to act in the interest of another party is known as the blank. Leadership directive, management priority, principal agent problem, or Sigma 6 structure.
Principal agent.
You guessing that, or you just saying that's the only thing? What kind of?
It makes sense to me.
Oh, that's the only thing that you heard. I mean, that's the only thing that you remember from the last time. All right. Let me ask
Was
you
it
this
right?
question. Why? It was correct. Sorry. Why are sole proprietorships so much more popular in terms of the number of firms than corporations?
Why?
Why are sole proprietors so much more popular in terms of the number of firms than corporations?
ABC?
What are ABC? Oh no, this is a short. This is an
Uh,
example.
it's a short answer slash, let's say,
Paragraph / 10 point question. Anybody? What are the benefits then? And this will help you. What are the benefits of having a sole proprietorship? Why are they more? Why are they? Because I don't want to give you the answer. Why do people opt to go with that route as opposed to trying to start a corporation?
You make your own decisions.
What else?
The owner get to keep the profit.
All the profits.
Right.
Um,
I'm gonna start calling names of people I know who in there too, so you can't duck. Anyone else? Want to get through the profits?
Less expensive.
When you say less expensive, you mean what?
I mean, like in terms of like wages, you probably wouldn't have to pay wages or get employees. It'd only be you who deciding what to spend the company's money on.
Correct. And what about as it relates to
a few documents. No
fuel
way.
documents is correct. And
Okay.
what about the ease of starting up or entry?
You control the assets. You control the way, the direction in which the company goes.
right.
Correct. Let me try some questions out of on the actual exam. Because yeah, it's the majority of questions. The majority of your points coming from the essays anyhow. Here's 1 points from your multiple choice. They add up, but we'll see. All right. So blank addresses the question of what business a firm should be in over the long term. Blank addresses the question of what business a firm should be in over the long run. Capital budgeting, capital structure, working capital management, or accounts receivable management. Blank addresses the question of what business a firm should be in over the long run. One, capital budgeting. Sorry, A, capital budgeting, B, capital structure, C, working capital management, or D, accounts receivable management. One second.
Is it working capital?
All right, anybody want to take a stab at that?
Working capital?
Anybody want to take a stab at, no, it's not working capital, so it's not C, working capital. Anybody want to take a, Kalia?
Capital budgeting? Hold on.
You guessing or you know
A.
it? A, capital budgeting, correct. So capital budgeting is the question of what business a firm should be in over the long run. All right, let's try this one. Blank addresses the question. Pardon? Okay. Blank addresses the question of where a firm raises money to finance its business activities. Blank addresses the question of where a firm raises money to finance its business activities. Working capital management, capital budgeting, capital structure, or accounts receivable management.
Capital structure?
Yeah, I agree. Capital structure.
You sure?
I sure.
I sure that one.
Yes, I sure.
Okay, so at least y'all get that part right of the exam. At least that's 1 point you don't got to worry about. All right, let's try this one. In practice, tell me which one of these are true. The corporate board is elected by the shareholders. The corporate board is elected by shareholders. The corporate board selects the main corporate officers. The structure of the corporation separates owners from managers, or all of the above are true.
All of the above.
All of the above.
Y'all sure?
Yes.
Yeah, all of the above.
That's two. Two we got right.
All right. I don't know if I should give y'all more because then y'all may, yeah. But y'all, I mean, we just forget anyhow, so y'all can forget. It's time it's y'all think All right. Let me try another one. All right. I start calling names soon because only a couple people answering, and I will make sure.
Could you see you answering?
I can see you answering because your name is pop up.
Yeah.
Yeah. All right. Because like Anthony just said, yeah, right?
No.
No, that wasn't
No.
Anthony.
See, he don't even know. He wouldn't know, y'all.
That was not Anthony.
He wouldn't know.
Antia, Anthony. I see all kind of names popping up. I don't know. All right, let's try this out. All right. The problem. Oh, I already gave you that one. See, I should shorten this quiz time because y'all pretty much got this.
Don't shorten it.
This is hour and 15 minutes. Make you sweat.
That's enough time. We shouldn't shorten it because we have short answer as well.
Yay.
Carl only give us multiple choice, you know.
Because Kaga didn't know about that. He said, "Man, I normally don't give essays." Then I said, "No, man, I give it." He said, "Okay." So I guess that's how y'all get it. Okay. Which which of the following is not an activity of a financial institution or market? Providing a market for the transaction of financial assets, providing information to buyers and or sellers of financial assets, bringing together buyers and sellers of financial assets, or are all activities of financial institutions.
Can you read the question again?
Which of the following is not an activity of a financial institution or market? Providing a market for the transaction of financial assets, providing information to buyers and or sellers of financial assets, bringing together buyers and sellers of financial assets, or are all of these activities taken by financial institutions?
All.
I would
I would
say
say
all.
All of them.
Hey, okay. Yes, sir. All right. True or false? True or false? The ability to raise capital is an advantage of the corporate form of business organization. The ability to raise capital is an advantage of the corporate form of business organization.
True.
True.
see.
Somebody say, see?
Yes.
Oh boy. Okay. Who said that? Let me make sure I look out for your paper.
That was just to say.
That's justice. Okay. The sum of, like I said, if you started the exam and you really couldn't finish, no, let me not say that. If you couldn't take the exam between now and on Sunday night, and if you're not dead or in hospital, please let me know so that I could kind of extend the time by another day. But it has to be extenuating circumstances, like that. Hospitalization.
Current off.
I know.
Oh, God.
We said it got to be island wide because I have to know that your area is definitely off.
Wow. That is up generator.
All right, let's talk about let me see. Which of the following is not an example of an agency cost? Which of the following is not an example of an agency cost? Paying an accounting firm to audit your financial statements, paying an insurance company to assure that building codes have been met for new construction, paying a landscaping firm to maintain your firm's grounds, the cost of designing contracts that satisfy creditors that their concerns will be met. Which of the following is not an example of an agency cost? Pardon?
See?
See?
B as in boy?
No, C as in cat.
Okay, why you sound like you Rowan? What happened? What I do?
C.
Sorry.
She run off
No.
just now.
And then she comes with the engines.
It's
Who was
C,
that?
right?
I apologize.
Was that again, Shantia? All right, I was
Yes.
for the people. All right. Of course, it's C. Paying a landscaping firm. Why is this not considered an agency cost? Why is this not considered an agency cost?
Because landscaping isn't a part of landscaping. Is a privilege. It's a not a privilege. It's a landscaping, and you could do that yourself. You ain't got to pay nobody to do that. I don't know how to explain it. It's not a part of agency costs.
It's not a part of, we would say, the
Like
data.
the corporate expenses.
Yeah,
Right.
it's not a part of the day-to-day. You could make money and the grass up.
And do not think, yeah.
Of course, it's all based on what kind of business the place is also. Because if you run a garden that hosts weddings, that's an agency cost, all right? So it's also based on what we are doing, all right? So let's look at it again. According to in the agency model, the owners of corporations are the agents and the stockholders are the principals. True or false? In the agency model, the owners of corporations are the agents and the stockholders are the principals. True or false?
Can you repeat that again?
In the
Please.
agency, no problem. In the agency model, the owners of corporations are the agents and the stockholders are the principals.
True.
How? Why is it true?
It could be because the owners are acting on behalf of the stockholders. No, maybe, I'm not sure.
In the agency model, the owners of the corporations are the principals and the agents are the managers. So the owners of the corporation, of course, is another word for stockholders as well, because your stockholders or your shareholders are the owners. I mean, the stockholders are indeed the owners of the corporation. So they are all the principal. So the owners of the corporation and the stockholders, all of them together are principals. And the agents are the managers who work in the business, who do the day-to-day. All right?
Oh, okay.
No problem. Okay, let me see if I can find another thing that is on your quiz. Let me find a question from tonight that may be on your next quiz. We talked about financial statements, right? The purpose of, and we're going to close right about soon. The fundamental starting point of all accounting statements is the accounting identity, computing identity, investing identity, or financing identity.
The fundamental.
Starting point of all the accounting statements is the accounting identity, the computing identity, the investing identity, or the financing identity.
All.
We ain't have that answer yet. Anybody want to take a tip on what accounting identity means? Well, the answer is A, accounting identity. What's
The
accounting
name,
identity?
the name of the company?
No, the accounting identity.
Liabilities plus
Liabilities
capital.
plus capital.
Okay, you only sound like y'all sure. Okay. Let's try this one out. Which of the following statements is false? The income statement summaries and a cap. Well, that's a bit long. But that's a good question to put on your, because I may send by next week, this time, I may still send another quiz. So just keep your heart and your mind ready. All right. So the income statement begins with revenue and subtracts various operating expenses arriving at the intermediate point of what? Earning after taxes, net income, taxable income, or earnings before interest and taxes.
Earnings before interest
Earnings before interest
and
and
taxes.
taxes.
Right. Someone asked that lady asking the question, but we're gonna get there. Only because tonight. Okay, and finally, net income is what? A, not cash flow. B, the cash flow from the operation of the company during the period. C, the increase or decrease in cash flow for the period. Or D, for income and taxes. Interest and taxes, sorry. Net
B.
income is A, not cash flow. B, the cash flow from the operation of the company during the period. C, the increase or decrease in cash flow for the period. Or earnings before interest and taxes.
B as in
B
boy.
as in boy. Why?
Because it's the profit from the
Let's. No, it's not. It's not B. Anybody else want to take a stab at it? Before I
Is
give the
it earnings
explanation.
before?
Repeat the question.
Repeat the.
Net income is not cash flow.
Yeah.
B, the cash flow from the operation of the company during the period. C, increase or decrease in cash flow for the period. Or D, earnings before interest and taxes.
Earnings before interest and tax. Sorry, it's D. Hold on.
I want to say as in
Net income.
dog.
Pardon?
No, it might be C.
I think C.
Is it C?
C. Increase and decrease.
It's actually
It's not cash flow. Is that it?
says
right.
not.
It's not cash flow. Let me give you the reasoning. Let me give you the reasoning. Net income is not cash flow. Net income is the accounting profit. All right. It's not a physical profit. It's the accounting profit from the operations of the company. Period. Cash flow is the increase or decrease in cash for the period. So net income is not physical money. Net income is actually like I said, not it's the accounting profit. So it's actually an accounting figure, not actual money in your hand. It's not money that's transacted. It's not money that you could spend. You can't spend your net income on an asset. Make sense? No?
Yeah.
Clear as mud? And anybody want to drop the class yet? No? I know a lecturer at COB who used to, after the first exam, he used to staple the drop hard form.
Please don't do that.
Just in case you had it. Pardon?
Please don't do that.
No. We even gonna drop add. Where you could drop on what you can add? That's a good question. Like I said, nobody fails this class. Even if you got to scrape over the finish line, you will not fail this class. Anybody need this class to finish?
Everybody.
So you better pass.
What is the last round?
Try your best.
Oh, so I could give us my see.
No.
Based on the law of averages.
Oh,
The law of averages. You get. Boy, I could drop at the end of the course, which means that the higher the chance you could pass. Now, if I only give you 4 quizzes, that means I got to take all the quizzes. But if I give you 10, at least I could drop 2.
But you said we can pass.
Yeah, we can.
We can pass. With understanding.
Small things. Kalia, you good?
I'm good. I still have to get it together, but
Okay, I see some names I'm familiar with, so I just want to make sure. But I hear you say nothing yet, so I just want to make sure you're good. We good?
Yes, this is my first night, so I very much behind.
Right, but you're too much behind. Just make sure the quiz you could Just read the book, take the quiz, and and another promise I make to everybody: if ever class you feel like you're not understanding, please stop me. I know sometimes I talk fast and then all my words come into one. So if there's anything that you don't understand, let me know. Also, if you need to reach me by, I saw some persons where they reach out to me outside of the group. You got my WhatsApp number, reach out to me. You got my email, reach out to me. I can give you as many resources as I to help you pass the class. All right. And to help you get an understanding of what we're doing. Because I know for some of you, I know, like you said, this is your first time doing anything related to numbers regarding accounting and anything like that. So we want to make sure everybody has that understanding. To find operating cash flow for the business for the year, add depreciation expense to EBIT and then blank. To find operating cash flow for the business of the year, add depreciation expense to EBIT and then blank. A, subtract the interest expenses. 2, add the 3, subtract the taxes. Or 4, add interest expenses.
Subtract the taxes,
Why?
because that's the formula.
You say
Yeah.
operating cash flow?
Yes.
Hold on, that's Shantia again? No.
Justice.
Okay. No, before justice.
I was Shakara.
Okay.
You less the taxes because.
Can you repeat the question one more time? Please.
The question was, Shikari Okaga, right?
I am.
Okay. To find operating cash flow for the business of the year, add depreciation expense to EBIT and then blank. Subtract the interest expenses, add the taxes, subtract the taxes, or add interest expenses.
Add interest expenses.
You sure?
Subtract the taxes.
Why subtract the taxes?
Because that's the formula.
That's what the formula say.
No, that is not the. I mean, you say it's operating cash flow, right?
Okay, even if that's what the formula say, why does the formula say it?
Formula is tested and tried.
Okay. Now I know what I can make sure, right? Because that's the kind of questions that you want to get in my exams. The what and the why. So just so you know. You know. Just a little heads up. All right. I think that's it for tonight. All hearts and minds are settled. If you have any questions, please let me know. Please, if you cannot get into the quiz, let me know. There are 60. No, I lie. There are 40 questions.
Mr. Conrad, how do we see where do we go to this?
You go on Moodle. You'll see under section 1. Do you have?
No, did we get an email or something with this information?
Who was this?
This Shantia.
You would have gotten an email from them. Did you get any? No?
No, I think they have my email still wrong, so I'm not getting the email.
What a time. Let me go find that for you right now.
Please.
Anybody else didn't get it? So when you go into Moodle, Introduction to Finance, that's the course, Finance 101. Under week 1, chapter 1, you see quiz, chapter 1. Participants, Shantia.
Yeah.
DRICASTAR 11.
Yes, I don't
Yeah, because it's saying that you never
Yeah.
came into the group. I mean, never came into it. I wonder why. You sure. It isn't in your junk or
I
anything
could
like
double
that.
check.
Double check
I'll
for me,
double check.
please, and let me know.
Okay.
Another thing is, who else isn't? Okay, Kalia, you've been in. Anthony, you've been in 18 seconds ago. Good to have you. Ashley, did you receive anything from Moodle?
Yes, I got a email. I think I was able to change my password as well, but I didn't go back on since that one time.
Okay, because they're saying never. I don't know why.
Yeah, I
Okay.
was able to change my password though.
Okay, good stuff. And Latira, you having issues getting in? Latira? Not there. Can everyone go in to see that they can get the can they go into the topic one to make sure that they see if
It's
they
there.
could the exam is there, right?
Uh-huh.
They're not letting 9 o'clock.
Right.
Okay, perfect. That's good. All right. So Shantia, I'm gonna look into this. DICASTAR.
Yes, 11 at Hotmail.
Okay. I don't know, but I have you. Let me see if I could do this. Okay, perfect. If that is all, Shantia, you can stay on the line, and everyone
Okay.
else, you can be free to leave. I'll see you next week. If you have any issues on the exam, please let me know so I can um, assist you. Also, so you know, you can't go do the exam at the same time. Um, yeah, it doesn't allow for that for some reason. Not for some reason, I know why, but yeah.
Thank you.
So good luck.
Alrighty.
Good night.
I'll
Good
And
night.
I'll send you by email. Um, everybody's email is pretty much good now, right? Everybody, if you got an email from,
Yeah.
let me show you. Let me before you leave, let me give you the listing of what I have in Moodle. Let me know if you don't hear your name: Shakara, Angelique, Carla, Latira, Shanaria, Ashley, Justice, Kelia, Anthony, and Shantia. Is there anybody whose name isn't in there other than Rochelle? Nice, everybody should have been in there. All right. Thank you all so much. So good luck on the exam. If you have any questions, let me know. Otherwise, pardon? Okay.
Thank you.
Have a good
Good
night.
Good
night.
night.
Good night.
Good
See you.
night.
Just
I'm still here.
okay. Good.
Hold
I
on.
would have.
Mr. Cartwright, question
So,
for you. Even you gave us until Sunday, September 28th. The first attempt, is it mandatory that we do the first attempt tonight or?
no. You have until between 9 p.m. tonight and Sunday to do your first and second attempts.
I just wanted to be sure.
Yeah, you don't gotta. Yeah, you go sleep. Go sleep.
No, I tired. I just was gonna say that.
Okay, yeah, go sleep. No problem. No stress about it tonight.
All right then.
All right.
All
Good luck.
right. Thank you. Good night.
Good night.
All right.
Good night.
All right. Let me see if I can make any adjustments here, Shantia.
Okay.
You're saying you're active. Enrollment starts 9th of September. Unlimited enrollment ends. All right.
We would have gotten this by
All right.
email,
Yeah.
right? Can you give me a date?
This was done. It was the last week Wednesday. Last Wednesday.
All right. Last Wednesday. That was
All
the
right.
9th.
This is you said Dricastar. I pronounced that right?
Dricastar, yeah, DRICASTAR 11 at
Dricastar.
Hotmail. Mm-hmm.
So anything yet?
No. And I check in my junk. I still don't see anything. I see an email from you on the 9th about class,
Right.
but
You should
that's
see
about
something
it.
from Moodle itself. See if you could search Moodle, Moodle. Participants. Shantia Simone. Your last name is Simone? No?
Simon,
With or without an A? And A, sorry, E.
no E, Simon.
Let me.
Yeah, I searched for Moodle and I don't see anything coming up.
What I'll do is I'll unenroll you and enroll.
Okay.
Tell me.
Okay.
All right. Enroll. Select Sean. Trika star 11. And okay. Enroll users. See if you see anything from there. No?
Okay,
See if you see an
one
email
second.
coming through.
Whew. Mm, nothing yet.
I wonder what happened here. Nothing yet. Tricastar11 at hotmail.com. TRICASTAR11 at hotmail.com, correct? I'm
Right.
trying to
That's
figure
it.
out why. Let me refresh it. You have another email address I could use?
Yeah. Precision242 at outlook.com.
Precision242. It's private files, my courses. Site administration. Section. Users. Add a new user. So let me switch. Simon. Force password change. Generate password and notify user. Shantia Simon. Let me get the new email address.
It's PRECISION 242 at outlook.com.
See anything.
Okay.
Precision242@outlook.com.
Yep, I got it.
That one? Perfect.
Yeah. All
Yeah, I
right.
love Matrika Star. Okay, but tell me,
I know.
see the exam, but just double check for me.
In this email, there should be a link for me to click. Tatiana, turn it down.
I think there may be a place for you to change your password, something like that.
Okay, I see it coming up with a username, password. It's telling me my login is invalid. It took me to, it says my new Moodle site.
Mm-hmm.
But what's the username I should put in?